Last week, we discussed three possible paths for the United States-Iran conflict: diplomacy, controlled fighting, or a wider regional war. In reality, we saw a mixture of all three. After nearly 2 weeks of American strikes, President Donald Trump paused direct attacks on Iran and gave diplomacy another chance. But this is not a complete peace agreement. The American naval blockade remains active. Iran-backed Houthi forces have attacked Saudi oil infrastructure near the Red Sea, and the conflict has also expanded toward the Caspian Sea. So friends, the war has entered a different phase. Direct attacks may be lower for the moment, but pressure is increasing through shipping routes, proxy forces, oil facilities, and global trade. Oil markets reacted immediately. Brent crude finished Friday near $96.78 after moving above $100 one day earlier. West Texas Intermediate closed near $89.31. Brent gained almost 10% during the week, while WTI gained more than 8%. Crypto, however, continues to show some resilience. Bitcoin is trading near $64,400, Ethereum around $1,625, Solana close to $78, XRP near $1.06, and BNB around $570. But institutional investors are still nervous. United States Bitcoin ETFs attracted approximately $499 million during the first 3 trading sessions of last week. Then, around $465 million left the funds on Thursday and Friday. That left only about $34 million in net inflows for the full week. BlackRock, led by businessman and CEO Larry Fink, remains one of the biggest institutional names to watch. Its IBIT Bitcoin ETF recorded strong buying early in the week, but it also led the later outflows. This shows that major investors have not completely abandoned Bitcoin. However, they are reacting very quickly to war headlines, oil prices, inflation fears, and interest rate expectations. And the coming week could be even more important. The Federal Reserve will meet on July 28th and 29th. Then, on July 30th, the United States will release second quarter GDP, personal income and spending data, and the Federal Reserve's preferred PCE inflation measure. If diplomacy improves, oil prices fall, and the Federal Reserve avoids an aggressive message, Bitcoin could attempt to reclaim the $66,000 region. But if American strikes restart, Houthi attacks intensify, or oil moves above $100 again, Bitcoin could retest the $62,000 to $63,000 area. Altcoins may face even greater pressure because investors usually reduce their exposure to riskier assets during geopolitical uncertainty. And this is where the long-term message of Coin Network becomes important. Short-term prices may be moved by governments, wars, whales, ETFs, central banks, and powerful business leaders. But real crypto adoption is also built by ordinary people who continue learning, participating, and growing together. Coin Network focuses on accessible participation, daily activity, community growth, rewards, and crypto awareness. Even when global markets are uncertain, the Coin community can continue building knowledge, remaining active, and preparing for the future of digital finance. For the coming week, watch 3 things closely: the United States-Iran negotiations, global oil prices, and the Federal Reserve decision. Follow Coin Network for the major crypto stories, market signals, and global developments shaping the future of digital finance. Okay, see you on the next video.